Good afternoon, Your Honor.
We're back on the record in case number 24-90447 QVC.
Good afternoon, Your Honor. Mike Esser, Kirkland & Ellis on behalf of the debtors. Our first witness will be Mr. Ted Stafford, but I do understand at this point that the objectors would like to move in some exhibits, and we are agreeable to that. We're going to reserve rights on certain of those and allow others to be admitted into the record to streamline the examination of our witnesses.
Okay.
Thank you.
Good afternoon, Your Honor. Malik Doss for the record. As counsel for the debtors put forth, we are largely aligned on exhibits. We are therefore introducing into evidence the preferred shareholders exhibits, starting with the prefix PX, including PX1 through PX366, with the exception of deposition transcripts, expert reports and source material, and pleadings. The parties are continuing to meet and confer on these open items and will be prepared tomorrow, hopefully, to discuss resolution. We will also reference the agreed upon exhibits between the parties with the prefix JX numbers, including JX1 through 51, subject to the exceptions just described. Okay. Thank you, Your Honor.
All right, thank you.
No objections, Your Honor.
All right, thank you.
Okay, Your Honor. We have submitted exhibits largely electronically. We will be preparing for our examinations individual witness binders with paper exhibits that we will be using with each of our exhibits. So I do have some binders for Mr. Stafford's examination. With permission to approach, I will hand a copy up to Your Honor as well as the witness.
If you have an extra one for my law clerk, that would be great.
Of course. With Your Honor's permission, at this time, the debtors call Mr. Ted Stafford.
Mr. Stafford, come forward. Take a seat, sir. I think you have to turn on the camera. All right. Raise your right hand. You solemnly, sir, affirm to tell the truth, the whole truth, and nothing but the truth?
I do.
All right. And unfortunately, you're going to have to get as close to that mic as possible because it picks up your voice much better.
Got it. I'll try to do this.
Thank you. I know it's difficult. Go ahead.
Sir, could you please state your name for the record?
Yes, Ted Stafford.
Sir, where do you work?
I work at Alex Partners.
Can you briefly describe what Alex Partners does?
Alex Partners is a global financial and advisory firm. We provide restructuring services in Chapter 11 processes like this, and we also have a large operational and financial consulting practice.
What is your title at Alex Partners?
I'm a partner.
Do you have a specialty?
Yes, I work in our firm's investigations, disputes, and risk practice. We provide litigation support, investigations, forensic accounting for clients, boards of directors, counsel.
What is forensic accounting?
So forensic accounting is the application of specialized investigative and analytical tools by CPAs on evidential matter, very similar to complex accounting records.
Do you hold any professional certifications in that field?
Yes, I do. I'm a CPA, a certified public accountant licensed in Texas. I also hold the CFF designation, which is certified in financial forensics. It's a specialty designation that focuses on forensic accounting. I also hold a CFE, which is a certified fraud examiner, which also applies to topics like the tracing of funds and the investigation of accounting irregularities and methodologies.
Do you have an understanding of when Alex Partners was first engaged by the debtors?
Yes, my understanding is about May of 2025.
And when were you first contacted about QVC?
I was contacted very late in November of 25, and my team began work in December of 2025.
Now, why do you believe you were contacted?
I was contacted because the council and our restructuring team had been identifying some inconsistencies between the legal documentation of certain transactions and the accounting records associated with those transactions.
At the time you were brought on, what was the scope of the analysis you were asked to perform?
I was asked to perform analysis of the cash flows to and from the various entities, including Linta and QVCG, and also to reconcile those cash flows to the general ledger.
What was your understanding as to who was going to be using this information?
My understanding was that our work was going to be organized and summarized and presented to the various disinterested director parties in the matter.
Now, at first, what time period were you asked to analyze?
I was initially asked to analyze the period beginning in December of 2022, extending up through November of 2025. That time period was later extended, and I was requested to extend our analysis backwards back to November of 2019.
When you were first engaged, what was the QVC Inc.'s accounting team's ability to provide you with a comprehensive answer related to intercompany balances and flows of funds?
The QVC accounting team's ability was somewhat limited, twofold. Number one, the accounting records were not clear in terms of a comprehensive evaluation of the flows of funds and intercompany activity. And secondarily, they also did not have the historical knowledge internally, because prior to roughly July of 2025, Liberty Media had been providing outsourced or shared services that owned the accounting function for those two organizations.
Now, when you first started diving into the accounting records themselves, did they provide a clear picture of the intercompany transactions between QVCG or Topco and its subsidiaries?
No, they didn't, and that's because QVC did not use intercompany due from account as the sole source for intercompany activity. They also used equity account, APIC account, additional paid-in capital account, that recorded certain transactions into equity as well.
Could you please describe that APIC accounting methodology?
Yeah, so now we're getting into accounting, so I apologize for that. APIC is a type of equity amount that shows up on the balance sheet like common stock or paid-in capital. And that APIC account transactionally will have many other normal day-to-day course activities that are flowing through equity, such as dividend payments. So you cannot just look at the total transactions for a month or even the ending balances in those accounts and get an idea of what the actual intercompany activity is.
Okay. Now, sir.
Can you just pull the microphone just a little bit closer?
Absolutely. Oh, to the witness or to me?
To you. Yeah.
Yes, Your Honor. Sir, given those issues, what did you determine was the best way to proceed with an analysis of the intercompany transactions?
I determined that the clearest and best way to understand the flow of funds and what went where and when was to use third-party bank statements, so we had a validated external source for determining the flows of funds.
Okay. Now, sir, combing through bank statements sounds like a lot of work, so why not just look at the debtor's 10Ks for this information?
Well, for 10Ks, what you're going to get is a consolidated presentation. So intercompany balances, whether in equity or due from, are largely going to be eliminated in consolidation, so you wouldn't have that information available. And also, given the interconnection between the intercompany activity and various other equity transactions, you're not going to get a clear picture just by looking at a summarized version.
Thank you. I want to talk about the timeline of your work a little bit. Did you prepare a demonstrative aid that will help with your testimony here today?
Yes, I did.
Can you please turn to tab Stafford DEM-1 in your binder?
Yes, I have it up.
And is this that demonstrative aid?
Yes, it is.
Will it help with your testimony?
Yes, it will.
Permission to publish, Your Honor?
Yes, go ahead.
Oh, I think we still need sharing capability for... Apologies.
Do you have it? Do we need to to give them left table, right table?
Should be go to meeting.
No, no. Oh. Are you doing go to meeting or, huh? Okay, so is it, hold on a second.
I think it's Jose Lopez.
I think it's Kirkland Viewing, is that? Oh, Jose Lopez, I'm
actually,
sorry.
Jose Lopez.
Got it, okay, I got it. I don't see Jose Lopez here. Oh, here it is. Okay. Okay. Here's the presenter.
All right.
Hold on a second. I'm sorry. There you go.
Thank you, Your Honor. Mr. Stafford, I want to talk about this timeline. Let's focus first on the lower left-hand corner that states initial diligence. What was your first step in your diligence process?
So the initial stage in our diligence was to request a listing of bank accounts associated with each of the entities in the QVC Group. We received that listing of bank accounts which identified the account number and entity, and we subsequently requested bank statements for each of those entities.
Thank you. What other accounting records did you request in addition to the bank statements you just referenced?
We also requested the general ledgers for both the Topco or QVCG and Linta entities.
Now, with these files, how did you go about identifying account ownership for the bank statements you were looking at?
So for the bank statements, we first validated that the identified entity on the master account list that the company held matched the statement name on the statement itself. And then we also validated the account entity owner from the bank statement against the general ledger in the November 2025 period, and we took that all the way back to September of 2023.
And, sir, how did you validate the completeness of the bank statement transaction records you were viewing?
So in addition to looking at the name, we also looked at the aggregate amount of bank activity for both Topco and Linta, and we compared that to the aggregated activity for both Topco and Linta at the general ledger.
And how about flows of funds? How did you analyze those?
So for flows of funds, what we did was looked at the nature and transactional activity between various accounts in the bank statements, informed our understanding of the nature and interconnectedness between those accounts.
Sir, what type of data fields did you obtain in this analysis?
So in order to analyze that data, we had various forms, largely PDF copies for the bank statements, so we had to digitize all of that. So we put that into a digitized comprehensive database for all the flows of funds in those transactions. And when we did that, we pulled the available information from the transaction records. So dates, entities, bank accounts, the transaction description that will accompany those records. And so each of those fields were pulled into the database to assist with our analysis.
I want to switch gears. In addition to bank statements, you've mentioned general ledgers. What were your initial observations regarding the organization of the general ledgers you were viewing?
So the general ledger came to us in two different pieces. There's two different reporting. We had a report out of Oracle, which included transactional information up through about July of 2023, the July of 2025. And we had an SAP report that was delivered to us for information between August of 2025 up through November of 2025. The reason that there were two different instances is because Liberty Media owned the accounting function in that earlier period, and so we had to get two disparate reports, one from Liberty Media and one from the records of QVC Inc.
So I want to pause on that point. How did the QVC Inc. debtors' accounting responsibilities change after July 2025?
So the accounting day-to-day record keeping, ownership of accounting entries that are going into the financial statements for Linta and QVCG were essentially taken over by the QVC entities after that switch. And so prior to July of 2025, Liberty Media was going to be making those entries and be responsible for those activities.
So before July 2025, how were those responsibilities split?
That would have been Liberty Media's responsibility before July of 2025.
And so when analyzing the records of QVCG or Topco and Linta, did you consult with members of the Liberty Media accounting team?
Yes, I did.
I want to turn to initial observations. I see referenced here in this January 16 time entry on your timeline. What were your initial findings related to the accounting records themselves?
The initial findings of the accounting records was that there was an incomplete picture of the intercompany accounts, largely due to the use of both intercompany activity and equity accounts, but also there was inconsistency between some of the bank account information and the entity associated with that information, and the general ledger information and the entity associated with the similar transactions at the same time.
Sir, did you create any work product related to that issue?
Yes, I did.
Can you please turn to the DX 286 tab in your binder?
Yes, I have it up.
Which is in evidence and we can publish. Thank you. Sir, I see the title of this presentation is Topco and Linta Bank Account Management, December 2022 to August 2023, and it's dated January 2026. Did you help put this together?
Yes, I did.
All right. Let's turn to page 10, bearing Bates stamp QVC underscore 0082737.
So this says highly confidential, and I thought, I don't know if it is or not, but to the extent that it is, then they don't need to publish it. We can just go through it without publishing it.
Understood, Your Honor. This is one we have actually agreed to down designate for purposes of the hearing, but I appreciate that, and we'll be mindful of that for highly confidential exhibits. Sir, could you please explain to the court what we're seeing on this slide?
Yep, we've talked a little bit so far about a cash management plan. What's illustrated here are two views of a series of transactions. On the left-hand side is a reflection of my understanding of what the legal documentation is associated with those transactions, where cash is flowing up from QVC. On the right-hand side of the presentation is the result of our cash analysis, which shows the actual flow of funds that were occurring between the bank accounts associated with each of those entities. And so this presentation shows the initial inconsistencies that were part of the reason that our group was engaged in December of 2022.
And ultimately, sir, as opposed to the depiction on the left, which depicts the legal documentation, what did your findings show in the depiction on the right?
Our findings illustrated that from an initial transaction, QVC advanced $800 million up to Topco in December 21st of 2022, and that subsequently over the next week or so, those $800 million was distributed amongst various accounts between both QVCG and Linta.
Let's talk about those various accounts. Can you please turn to page 12 of the presentation, which bears the Bates number QVC underscore 0082739.
All right. So we move from illustration to numbers. So I'll try to break a little bit of up, and we'll talk to some specific components here. I mentioned the $800 million. The very top row of the schedule that we're going to look at, and it's organized with transactions across the rows and bank accounts across the columns. So when you look at the very top row, what you're going to see is a reflection of the $800 million that was transferred from QVC Inc. into the Topco operating account. And those column headers are just the last 4 digits of an account number. It helps us identify where it goes.
All right. And what was the net result of the transactions that took place on December 21st, 2022?
So after the $800 million came in, there was 6 subsequent $50 million transfers that came out of Topco or QVCG, and those amounts were transferred to a Linta-owned investment account, and that is the column that's labeled 686714.
All right. Now let's focus on the bottom half of this table, the transactions that took place on December 28, 2022 and December 29, 2022. Could you please describe those for the court?
Yes. So again, the top row shows an initial withdrawal from that Topco account. So you have $500 million in that first column, and that $500 million is transferred to a newly opened operating account of Linta's. The next day, from that Linta operating account, you're going to see 5 different transactions, 4 of which are roughly $1 million, the 5th of which is about $99 million. And so the negative means that coming out of the Linta-owned accounts, those amounts were deposited into a newly formed Topco-owned investment account.
And then finally, sir, if we could look at the bottom row, what was the net result of these transactions?
I'll wait for that to come up here. So what you're going to see is the total amount deposited into Topco accounts was $499 million. That's that center column you're going to look at. And then the Linta-owned accounts ended up with $301 million separated between 2 accounts.
Okay. Now you mentioned newly created accounts. Which of these accounts were newly created?
The 2 new accounts that were created were those that are the 73111 account, which was the Topco investment account, and then the account ending in 3410, which was the Linta operating account.
And sir, did you do any further investigation into the activity in these newly formed accounts after this December 2022 transaction?
Yes, we did.
I'd like to talk about that next. If we could turn to page 14 of your presentation, bearing Bates number QVC_00827141. Now, sir, what activity did you observe regarding these newly opened accounts immediately after you started looking at them?
So while we were able to identify that bank account activity was recorded in a general ledger, we identified that for these operating accounts after the cash management plan and the opening of the account, the operating accounts reflected the opposing entity of the transaction. And said another way, if there was a cash outflow from a Linta bank account, that cash outflow was reflected in the Topco general ledger and vice versa. And that occurred beginning with the opening of these accounts in December of 2022, and that extended through a period up till about August of 2023.
I want to walk through your depiction of that here. Can you explain what would happen for a payment that was ultimately going to an entity you determined was affiliated with Topco?
So if a amount came in and was held in the investment account, so the way the kind of operational accounting worked was funds would be deposited into an operating account, excess cash would be swept and held at the investment account. The investment accounts were not organized or conflated during this period, but if we look at the top left box, you'll have cash in that investment account, and the Topco investment account would then send funds to a Linta operating account, and the Linta operating account would then send funds to the Topco intended recipient.
And was the opposite true as well for the LINTA intended recipients?
And the opposite would be the case. And so if we were to look at the bottom left-hand box and follow the blue arrows, what you're going to see is the inverse of that. The LINTA investment account funding a TopCo operating account, and the TopCo operating account paying a LINTA intended recipient.
Now, sir, did you mentioned this, but did you determine that at some point this issue was resolved?
That's correct.
Okay, let's go to slide 22 of your presentation, bearing Bates number QVC underscore 0082749. And I see here it says August 30, 2023 correction. Can you please describe this for the court?
At this point, the Liberty Media accounting team had identified that there was this bookkeeping and accounting error that was recording cash activity for a bank account at the wrong general ledger. They made a change in their operational process to begin recording the cash activity to the correct operational account. And so that going forward, what you'll see is essentially a straight line in terms of the cash is now going from investment account to the correct operating account to the correct intended recipient.
Did they go back and correct the entries that have been made?
They did not go backwards, and the reason the adjustment was essentially retained was that the way that the cash went into the operating account and then the excess cash was swept up to the investment account meant that the totality of cash held between the entities was still differentiated. The net cash impact in the operating account when they recorded an adjusting entry was in the magnitude of probably $1 million or less. The operating account usually had essentially a balance of $1 million or less, and the excess cash was swept. And so they didn't go back and restate all of the accounting entries. They just addressed the alignment of that account going forward.
So let's go back to your timeline slide. Stafford Dem 1. This presentation we've been discussing, did you make this presentation to the disinterested directors in this case?
Yes, I did.
And when was that?
This is on the January 22nd timeline here.
Okay. And now did you make the presentation again after that?
Yes, we did.
All right. Who did you make it to?
I made this to various counsel for lenders on the January 29th and January 30th.
Thank you. So with that, I see at the bottom arrow an expanded diligence phase. Could you please describe that for the court?
So the expanded diligence pertained both to the timeline when we were asked to extend our analysis from starting in December of 2022 back through November of 2019. I referenced that earlier. That's the expanded timeline that we were looking at. And then we also continued to validate our understanding of the accounting activity and the transaction flow that we were identifying.
Okay. I think we could put the timeline away. I'd like to focus on we talked about the $800 million that went to TopCo in the 2022 cash management plan. I'd like to focus on a few other discrete buckets that you identified. And if you could turn to tab DX292 in your binder. I see at the top it says QVC Inc. payments to QVCG, which we also refer to as TopCo, for debt-related dividend payments from January 2023 through November 2025. Did I read that right?
Yes.
So, sir, what are we seeing here?
These are transactions that were amounts paid from QVCI or QVC Inc. up to TopCo, and they largely occurred between the first quarter of 2023 and the third quarter of 2023.
Okay. Now, sir, I see that they're referred to as dividends related to debt. What's your understanding of whether TopCo had debt?
My understanding is that TopCo did not have any debt.
And so how did you identify that these were dividends allocated to debt?
So our identification of the transaction purpose focused on and was centered on our identification of the transaction details from the bank account statements themselves, and we augmented that understanding with the general ledger details as well. So you'll have transaction descriptions in the general ledger, and then to the extent that neither of those two were fully informative, we also relied on additional accounting records and subledgers.
Okay, and I'd like to focus on the notes at the bottom as well. The notes indicate the QVC Inc. payment amounts listed above were received by QVCG, or Topco, and subsequently paid by QVCG to a BNY Mellon corporate trust account that I understand is associated with payments on Linta debt. Is that right?
That's correct.
Okay, so walk us through. After these dividends went from QVC Inc. to QVCG, what happened next?
So we have the QVCG accounting records, so we see both inflows into that account and outflows out of that account. So we see transactions coming in from Inc., and then we see those transactions being paid to the third-party Bank of New York Mellon account, and we see transaction identifiers that would denote dividend allocated debt. In the general ledger, they will also have an identification of specific interest rates associated with notes, and we understood those to be Linta-related notes.
Okay, so essentially, money flowed from QVC Inc. to Topco, and Topco then used that money to pay Linta debt. Is that correct?
That is correct.
Thank you. Okay, let's look at another one of your schedules. That'll be DX 301. And this one is a little bit complicated, so I want to take it in steps. But before we go step by step, at a high level, sir, what is this chart showing us?
So we, in the earlier presentation that illustrated boxes, we talked about $800 million of transfers. That's related to a component of the cash management plan. This is a separate $300 million associated with the same cash management plan.
Okay. And now let's focus on the first two rows as well as the columns.
And while that's coming up again, the rows will apply to specific transactions, and the columns here are going to apply to different entities. And so what we'll show is positive numbers will be inflows of cash to an entity, negative amounts will be outflows of cash from that entity. And so the first row is inflow of cash to the CBI, the cornerstone entity, based upon a borrowing on the revolver facility. And then the second row shows that the $300 million was distributed from CBI into QVCG.
And let's look at the next two rows as well. What happens after that?
And so looking here, what you can see is subsequent to the contribution of cash to QVCG, the QVCG cash was then distributed to Zulily, and then the same day, Zulily made a payment of $277 million to repay its revolving facility.
Thank you. And then let's walk through the final two rows. Thank you.
Do you want to jump to the final two, or you want
no,
to
I
take
apologize. Let's
the
take
bottom
these
four?
next. Yep, December 15th. Thank you.
Yep.
Oh, sorry, December 14th next, the next two rows.
So here on December 14th is what we have QVC Inc. borrowing $300 million on its revolving facility, and that those funds are subsequently distributed to QVCG on the same day, which is the second row showing the negative for the Inc. and the positive amount for the Topco or QVCG.
Okay, and then what happened on December 15th, the final two rows?
And then on the next day, QVCG makes a payment of $300 million plus a little bit of interest to CBI to repay the revolving facility. And then you have CBI making a payment to, I'm sorry, I misspoke. I said revolving facility, but it's the loan that was issued between CBI and QVCG. And then the last line shows the payment from CBI to repay its facility.
Okay, now let's take a big step back and look at the whole thing again. And can you summarize essentially the initial draw from Cornerstone Brands on the revolving credit facility, where that went, and ultimately what happened?
So this illustrates, taking a step back, the $300 million from the CBI revolving facility was paid to pay down the Zulily revolving loan. And then you have the QVC Inc. revolving facility, which is ultimately sent through QVCG, which is used to repay the CBI revolving facility.
Thank you. Okay, let's talk about tax next. Sir, are you aware that the debtors are subject to a tax sharing agreement?
Yes.
And did you review that as part of your diligence?
Yes.
Okay. Did you seek to identify payments associated with either that tax sharing agreement or the debtor's payments to taxing authorities?
Yes, I did.
Let's look at DX 294. Now, sir, why don't you walk us through, I think, Roman numeral 1 first at the top of the page, and then we'll go to the payments to taxing authorities after that.
Yeah. We'll try to summarize this at a high level. We're not going to walk through every number here. But in general, what's illustrated up here on the screen is the total amount of cash that was advanced from QVC Inc. to QVC Group and identified as tax sharing or tax payment related. You'll see that there's three numbers. The gross amount that went up from Inc. to Topco was the $986 million plus number. There were also subsequent returns of cash from QVC Group down to Topco, down to QVC Inc. I apologize. It's the $32.8 million number. And so the net amount that went up from Inc. to Topco was the $954 million approximate number.
Okay, and we don't need to walk through all the entries, but essentially is Roman numeral 2 totaling QVCG's payments to taxing authorities?
Yeah, so if we go down to the subtotal at the bottom, it's just barely cut off. So in addition to looking at flows of funds from Inc. to Topco, I also looked at flows of funds from QVC Group out to identified recipients, either the IRS or various taxing agencies. And the total amount of funds that went out from Topco to those various entities and are summarized on this page is the $441 million number. It's the top right-hand corner. That's the outflow to the third parties.
And then ultimately, sir, did you net that number against what QVC Inc. had sent up to Topco or QVCG?
Yeah, so if you're looking at this excerpt here, the bottom right-hand total, $513 million approximately, is the net total between amounts that were sent up to QVCG and amounts that were paid to third parties.
Okay. Next bucket I want to look at is the dividends to the preferred shareholders. If we could turn to DX 296 in your binder. And sir, I think we can walk through this pretty quickly, but what is the total amount of dividends that QVCG sent to preferred shareholders during the period you looked at?
So if you look at this table, the duration between 2020 and 2025, the total amount of payments were approximately $456 million.
And what was the cadence of those payments?
Those payments occurred roughly quarterly during that period.
And at what amounts?
They are roughly $25 million and change.
Thank you. All right, and then let's look at dividends to common stock. That's DX 298. And same question here, sir. Could you just give the court the total amount of dividends that went from QVCG or Topco to common stock during the period you analyzed?
Yes. Between the third quarter of 2020 and the fourth quarter of 2021, the total amount of distributions was a little bit more than $1.738 billion.
All right. Now let's take a big step back and look at the grand totals of the intercompany transfers and look at DX 289. Now, did you determine the grand totals of the amounts that QVC Inc. dividended or sent up to QVCG during the period you analyzed?
Yes. I summarized the total amount of inflows and outflows between QVCG and QVC Inc. and its subsidiaries.
Now, I want to look at each column in turn. How much did QVC Inc. send up to QVCG from November 2019 through December 2022?
So if we're looking at just the discrete time period of November to December of 2022, November of 19 to December 22, that's $3.109 billion.
And then I see the December 2022 cash management plan. What's the total there?
So the cash management plan is the $1.1 billion. That's the kind of deep dive that we've done in the $800 and $300 million buckets.
And then now how about post-December 2022 cash management plan dividends? What did those total?
The total amount after the cash management plan is in excess of $600 million.
Okay, and what is the grand total for that period?
The grand total is $4.810 billion.
All right, now let's go to the next page. Sir, did you ultimately net that number against any downstream payments that QVCG sent to QVC Inc.?
Yes.
And yep.
This schedule similarly shows outflows from Topco or QVCG down to QVC Inc. and its global holding subsidiaries. The net number we have up here after taking upstream payments to Topco less downstream payments to Inc. are summarized. The amount for November of 19 through December of 22 is that $2.980 billion, and the rest of the schedule is organized similarly.
All right, and then what was the net number for the December 2022 cash management plan period? It looks unchanged.
So the net amount, there was some amount of distributions down from QVC to Topco, but the net amount was $4.636 billion of funds going up from QVC Inc. to Topco.
And of that number, sir, how much was sent up net basis post 2022 dividends?
So that's going to be the third column if you're looking left to right, and that's the roughly $556 million.
Okay. Thank you, sir. Your Honor, if I just may have a second to confirm. All right, thank you, Your Honor. I will pass the witness at this time.
All right.
Yeah, 5 or 10 minutes.
Sure. It's 2:56. Why don't we come back at 3:10?
Thank you.
You may step down and obviously don't discuss your testimony while you're off the stand.
Certainly. Thank you.
Thank you.